27 June, Tuesday, beer buying day. Okay, so why I give beer buying day? Because at the starting hours, market shows pullback or downside movement, beer move, and then after certain uh, point, second leg or third push after that, buyers are fading it and price going towards high of the day and breaking the high of the day. Okay, so we see really towards high of the day. So I given first hour which is the beer, so that's why beer, and then after buying channel is going on, so buying day, so I gave this name. If you see, uh, this is the 20th June chart. I already explained it. If you see here, so same pattern happen. Beer's first leg, then second leg. Okay, then at around 11 o'clock, buying channel or bull channel is going on, and we around 1330 we are breaking the high above already, and then again also after this pullback we are seeing new high of the day. Okay, same thing happened today. Okay, so if you see, uh, this is also uh, opening bearish move. Okay, so first push, second push, and probably this is third push, then market reversed from here. Okay, this pullback is considered as a pull flag pattern in this bull leg. Okay, and then we created channel of buying. Okay, if you see here, in our flow of chart, so we go for weekly chart, general review, then deeply analysis of bar by bar, tick by tick. Okay, then our methods to trade in all structure. Okay, so let's go for uh, daily structure or weekly structure. If you see here, yesterday we saw doji candle. So in, if you notice that in last hour, okay, uh, yesterday bull candle, bull bar created. Okay, so if you see here in this, if you consider this channel, if you notice here that at the bottom of channel, any bull bar, uh, look, this is the bull bar, so very next good follow through is for bull bar. Okay, this is the second candle which is the bull bar, so he got followed through and market reversed from here. If you notice here, this is also bull bar, market reversed from here. If you consider it and put your SR to low, so this is also a good example, then market reversed here. This is also one example, uh, second bar. Okay, market reversed from here. So by considering yesterday's movement, so this is the bull bar. Here after bull bar, market tries to go below it, but it faded by buyers yesterday in same time frame. Okay, we saw so today gap up, and again this bull bar came, and after that we got three consecutive bull bar, which is the good follow through. Okay, let's go for general review. If you see, there are good swing trades are that, this is the bears move. If you participated anywhere, so after seeing this consecutive three bars, you can exit because it is breakout to the EMA. So this is the good swing trade. If you notice this bull bar, which is the breakout to the bar, if you participated in this bull bar, is also best way to trade. I will show you that because this is the wedge pattern, breakout to the wedge pattern. Okay, this is also good swing. Okay, after seeing these consecutive bear bars, if you exited, then again go long at breakout to the EMA. It is also best opportunity. So move your, if you not exited anywhere here, move your SL to here. Okay, just stay in, observe the prices and put your protective stop loss where that you stay in the position, okay, for long time, at least for 1 hour or 2 hours. So if you uh, after scaling or after creating even fresh position here, you just put stop loss to here, okay. What you can do, you just wait for 1 hour or 2 hour, because it is chasing towards high. This bear's move is not sufficient or not have strength, okay. This bear move, where first leg ending somewhere here and second leg which is ending somewhere here. So after this bull bar, we are seeing continuous buying going on, okay. You can also trade on breakout trade, okay. Breakout structure is also traded here. This is the retest to the breakout, okay. So bears have first leg here, second leg here. So this is also good opportunity. Around 230 there is this bull bar, so buying it also good opportunity. Put your stop loss below EMA anywhere here, okay. So you, if you entered here, this is the last hour exhausted move, big bar move, okay. So it is the also good opportunity. Let's go for tick by tick chart, okay. If you see here, yesterday we seen two-sided move, okay. So trading range day, so upper portion is faded by sellers and below portion is faded by buyers. So prime stays at the moving average or midpoint of the moving days range, okay. And today we open all about this range, okay. Breakout to the all this trading range. So chances of going downside is high rather going upside, because retesting somewhere point are here. Even testing to the EMA is also valid point, okay. In opening a reversal trade in first hour, we are going for two approach. First, which is opening reversal, and second is first bar close, where we are if you consider here, uh, okay, this chart, which is 23rd June. So if you consider here, if you bought or sell, if you sold this bear bar, because it is the bear bar, so we trade in this direction, downside direction, okay. So if you are selling here, we go for at least measured move, so which is up to somewhere here, and we are achieving target here. Same if we selling here at first bar, okay. After seeing this movement, this bear bar, you can also scan in here, move your SL to here. So you are now in 2 times position. You can again scale in at 8 bar, and you can exit somewhere here. First position you exit at break even, and these two position are in profit, okay. So this is the one type of trade. So first bar, which is the sort of doji bar, okay. So if you traded for buy, okay, so I will tell you scenario. First bar, which is the doesn't make to trade anywhere, okay. If you are trading 5-minute chart, because it is the doji candle, so any side confirmation is no shown here. If you consider our structure wise, so let's say if you buy here, okay, then very next candle is good follow through. Third bar, which is the bear bar, okay. So if you are not exited after second bar, okay, so you can also participate in this fourth bar. After seeing first bar, what you can conclude is that this is the doji candle. So days probably will be two-sided, okay. No any one-sided strength will be going on, at least for starting hours. So if you consider this move, so it is the two-sided move where limit order placing are going on, okay. So if you manage well, you can enter somewhere here and exit at this point, or you better is to you take SL, small SL, and exit, okay. You exit small in profit, okay, small position in loss. In opening reversal trade, we are trading reversal type trade. Okay, let's say here is the yesterday's chart. If you see, first bar is bear bar, and very next bar, which is the bull bar. So it is the considered as a reversal candle. So we are trading at the close of the it. So we are buying it, and very two candle, which is the follow through, and it is the good follow through. So you can exit somewhere here, or you are put your SL to here. Okay. This is also third bar, which is the bear bar. Also uh, reversal trade, opening reversal trade. So you can sell it. After saying this 6 bar, you can scale in here. Okay. So 7th and 8th are good follow through. So if you notice here, this candle is considered as a measured move. In Nifty index, we are achieving this target. But if you notice here in futures, okay, futures chart, so it not got good move. Okay, so if you consider this is the candle, so here if you see, we not showing very well strength in downside. Okay, so I traded also third candle, sell position, so exited somewhere here because in future there is no movement. So in future, if in future there is no movement, so option prices are going for decays. Okay, they are not moving anywhere, so their price is going to decay uh, every tick. Okay, fourth bar, which is the not good follow through, so it's showing that we are trading in ranges. Okay, channel. So this is the top of the channel, this is the bottom of the channel. After this third three consecutive bear bars, we gone for ranges. So uh, ninth bar, which is the bull bar. So who traded this bull bar can scale in here. Okay, if not exited, you can scale it here, and at this top of the range you can exit here. Your aim to be buying side, if you taken buying side trade here, your aim to be is to exit at break even. Okay, 11th bar, which is the bear bar, 14th bar, which is the bear bar. So if you are sure that this is going to be bear side, okay, here it looks not strengthy. Okay, so market is not going downside at high speed. Okay, because after seeing these three consecutive bars, there is at least 6 to 7 bars which is our side bar. Okay, so if you consider every breakout, market not moving below every breakout. Okay, so if you notice here, this is the breakout to the price and buyers are coming here. This is the breakout to the price and buyers again bought here. Okay, this is the sign that we will see some reversal from here. Okay, this bear move has a first push here, second push here, and probably this is the third push which is faded by buyers. So they have even no strength to create any consecutive bear bar to this breakout point. Okay, below EMA. So after saying this 18th bar, 21 bar and 24, you can exit in this selling position and you reverse your position. If fresh buyers are there, this is the discounted price for them and they will buy here at 24th, 25th. Okay, market is not going below EMA. It again back to the above the EMA. After seeing 27th bar, which is the breakout to the bar, always in position is converted into upside. Okay, 26, which is the inside bar. If you consider 1, 2, 3, 4, 5, from 24th to 23th, there is 5 consecutive bars are there. So it's considered as a market is reverse. We chase for high of the day and even above high of the day. Okay, 29 bear leg. Okay, still always in position is long side. We again see 31, 32 up to 34. Good follow through for bull bar, bull move. After seeing 35, if you are long anywhere here, you can exit here. Even exit on 37th can bear bar. You again enter at good looking bull bar here or even here. Okay, this is the probably first leg of seller side. Okay, if you see in micro time frame, so this is the first leg and this is the second leg, which is the breakout to the EMA 1 2 3 4 5. It's also considered as a deep pullback. I have one example I will show you. If this type of pullback going on, either it be part of channel or it's considered as a sellers are activated here, or even high or further high they again activate. Okay, after seeing this pullback you can also go for that view. So at 46 47, which is the reversal bar, also if you traded 40th bar bull bar, you can again scale in here. And okay, so best reason to trade here is that this is the going for high of the day. Okay, here if you see this anywhere price is not going below EMA, so it is high chances that it will also faded by buyers. Then another reason is EMA gap. Okay, sellers second leg which is ending here. Okay, so 48, which is the good follow through breakout to the EMA 49 50, this 4 bar again uh, convince buyers that we are going for chase for the high of the day. So you can move your SL to below 56 or below breakout candle, which is the 48. 51 and 52, two bear bar still always in position is upside. These two bull bar bear bar are not sufficient to convince traders that we are going for downside. So at even F2 close buying is also best way because it is the above EMA. Okay, from here from 47 to up to 62 there are consecutive bull bars are there. Sellers have only this uh, two consecutive bear bars which are not in good looking. Okay, so this is considered as a first leg, first push, second push and third push. So good looking micro channel, bull micro channel after breaking a high above the day. So this is the 62 candle, which is the still momentum going on. 62 63, which is the part of selling first leg. 66, which is the second leg near EMA, so also good reason to go for long at 67 position. If you are holding anywhere here, move your SL to below it. Okay, if you exited some of your position at this bear bars, you can again enter here. Okay, 69 70 71 72, these are good follow through bull bars are there. Okay, so overall day is trending bull day. Okay, if you manage well position and scaling at approx level. Okay, scale in here, scale in here, scale in also here and here, so it is the good way to trade. Okay, I will also show one example. This is the another example. Okay, if you see starting bear move, then we started to chase for high of the day. If you notice here, we given breakout to the downside. Okay, pull back to the downside, and this is the 4 consecutive bear bar, good looking bears bar are there. So they what they creating in is that still if higher prices are um, if found, then again they can go for this type of move. Okay, two-legged move. So here is the point that they got successfully creating channel. Okay, this is the not strong bull move. If you also see that this is the second leg, which is here is not very strengthy. Okay, these 3 consecutive bars are there, 2 consecutive bars are there, and at the end faded by sellers. So today if you see here that this is the successfully able to create channel here. Okay, if you see only 2 legs are there here which are not good, and price stays above EMA. Okay, So you can compare it and make your strategy well. Okay, let's go for very next topic. One way of trade in all day structure. Okay, well, where in this topic we are finding for uh, two approach, wedge pattern and midday pattern. Okay, in wedge pattern, if you see, here is the not wedge pattern. Okay, if you see, this is the wedge pattern in this buying channel. So at this point, bull bar uh, given breakout to the wedge pattern, and the sellers are not unable to create another bear bar. So now buyers will take over it and fade it to go for second move. So we can trade here it. Okay. So if you see today's chart, so at the starting of point, uh, this move is considered as a wedge pattern. If you see, first two bear bars are lengthy, and then at the end momentum is not there. So it is faded by buyers, and buyers will try to create first leg, second leg, and probably the channel. If they're creating channel, then we can chase for a high of the day and even above high of the day. Okay, in midday approach. Okay, so if you see, there is one wedge pattern here, another wedge pattern which is created somewhere here. Okay, so mainly two good looking trades are we are finding here. If you see in midday approach, so whenever prices come to the midpoint, okay, this is the considered as a midpoint to the overall range. This is the high, from top to bottom, this is the range, price coming to the midpoint. Okay, so in this we are considering EMA. Okay, how market price reacting to EMA. If you see here, it is the breakout to the EMA. If you traded well this breakout bull bar and still in position, okay, observe price here. If you finding that again price going for breakout to the EMA, this is the EMA gap signal, breakout to the bull bar, you can scale in here. This is the one scale in here, you can trade it here, even you can fresh position here for second leg and assume that we go for channel, some type of channel. Okay, so this is also a good trade. Okay, okay guys, uh, there are good swings are there, mainly two good swings are there. This is the bear channel, and there is in this bull channel there is no reason to go for any sell signal, only buying signal is there. And if you bought anywhere bottom of the this channel, then stay in, just put your appropriate SL. Okay, move your SL and scaling approach, so you can exit somewhere here or exit somewhere here. Okay, it is the right way to trade. Okay, so you also see my last video. Okay, so I have explained it very well. There are also day structure, so you make sure to go and watch here. They where I also explained many patterns, so similar patterns are also there. If you want to also go for today's similar pattern, so in this video at last portion I gone through it. So I this is the same we discussed here. Okay, so I also explained many of the patterns. So this is the one pattern. Okay, so I consider it's a 5 to 6 similar type of day, how you can unfold uh, days going on, further day will be go on. Okay, so if you see here, this is also same two-legged move, bear move, which is not very strong because this is the pullback, and if pullback is there, deep pullback, so chances of going down further go down is very low. Faded by buyers, we go for high above the day. So this is also another structure. Okay, you can see that video and you will get idea. Okay, so thank you.